Welcome to Dukascopy TV. Today we'll be discussing Australia's economic situation with Ken Veksler, Director, Accumen Management. The recently released RBA minutes show that the bank was concerned about the country's housing situation. Ken, is Australia heading for a housing bubble? What could stop it?
Look, in my opinion, no, I don't think Australia necessarily is heading for a housing bubble as we commonly define it. Ultimately, the situation in Australia, as it has been for the last probably 15 or more years, is one of steady growth. Sometimes that growth has outpaced what has been seen as, normal elsewhere. But having said that, reversions and corrections have been somewhat limited, and the likelihood is that the market tends to plateau before starting to climb again. And in terms of what could stop it, well, given that the underlying premise is that I don't think Australia is necessarily heading for a bubble, there wouldn't be anything per se to stop it outside of obviously a sharp rise in interest rates.
There are calls for RBA to address unregulated cheap loans. Could Australia see a UK-type situation?
No, well, the thing is that in terms of a regulatory standpoint for loans and certainly domestic loans or rather retail loans, sometime in the late 80s, early 90s, the banking sector got fairly significantly shored up on the bank of some fairly dubious dealings by the likes of a certain Christopher Skase and Alan Bond. As a result, the four-pillar system, or the four main banks that are situated in Australia, domiciled in Oz, have pretty much have been shored up back then, and as a result, any sort of lending practices coming out of that were fairly strictly enforced. So, in terms of seeing it, in a similar light as the UK, it's not really a similar situation in that unregulated loans aren't really particularly prolific in the market.
Internal Reserve Bank of Australia modelling suggests that Aussie may still be overvalued, even after its recent week-long tumble of 4 cents. Can the RBA push the dollar down as much as it needs to?
Well, I suppose that's a two-pronged question in terms of, what does the RBA need to see the Aussie at? I mean, Stevens was quoted some months ago saying that he'd be far more comfortable with the Aussie 85 against the US or lower. There's only so much they can do in terms of policy and certainly in terms of rhetoric. On the rhetoric side of things, they've done as much as they can, and as far as the policy is concerned, I wouldn't expect them to be dropping rates certainly anytime soon, and in doing so, if they were to, they run the risk of the economy overheating, which they certainly want to avoid at all costs. So as such, I think the RBA is likely to take a step back outside of enforcing rhetoric for the near term and probably look to see how the overall global picture develops, and certainly, first and foremost, what we see out of the US and whether recent strength in the US dollar is set to continue, and if so, then the heavy lifting is likely to be done by the US as opposed to the RBA.
Finally, how fragile is Australia's economy?
Probably no more fragile than any other economy that's essentially tied into one major export partner. Obviously, in this instance, that's China. Now, the situation in Australia has been the same in terms of its dependence on external export partners for, probably the better part of the last 50 years. So having weathered the overall financial crisis in 2008, 2009, and with minimal exposure to it, its biggest risk comes from an overall global slowdown, a commodity-led slowdown. Now, given that iron ore and copper prices have been dropping significantly in the last couple of months, Australia is obviously open to that sort of downside, but generally should be wearing it relatively well, because ultimately it's not just China that Australia exports to, and it's not its only significant trading partner. So as such, with India and Indonesia and certain other Asian markets available to it, I think it then becomes a story of how much you buy into a China slowdown or a China crash, and subsequently what the flow-on might be for Australia. But overall, I think it should weather the slowdown relatively well.
Thank you for your time, Ken. Keep watching Dukascopy TV for updates on the market. Until then, goodbye.